Investors still dissecting the key takeaways from Berkshire Hathaway's annual shareholder meeting after Warren Buffett broke down his latest moves, including taking a 9.5% stake in Activision Blizzard. Sam Rowe, who is Ticker.co editor, was there over the weekend. He is back home in New York now. But Sam, we talked to you on Friday ahead of the meeting, and in reading your latest piece where you talk about your impressions, it seems like one of the big takeaways was Buffett saying, "Don't trust me as a market timer." Is that fair to say?
I think that's fair to say. At the sort of earlier in the meeting, he actually mentioned that Berkshire Hathaway bought about $51 billion worth of stock in Q1. And on a net basis, it turned out to be about $40 billion worth of stock, which is still an astronomical amount of money. That's about a quarter of the cash balances that Berkshire Hathaway had. And a lot of this buying occurred between, late February and early March, where we recently had a low in the market. And of course, one of the shareholders came out and asked about market timing, about if this was a bottom or if this is a great time to be buying because stocks can only go up from here, framed sort of like that. And Buffett sort of pushed back on that to make very clear that just because he's buying aggressively doesn't necessarily mean he's calling for a bottom. And he reflected back on 2008 when if some of us will remember that in October of 2008, during the darkest hours of the financial crisis, Lehman Brothers had just gone bankrupt and the markets were crashing. He wrote an op-ed for the New York Times that said, "Buy American." Quote, it was a quote, "Buy American." He was telling people to buy stocks. And in retrospect, it was an amazing time to be buying stocks because the stock market has, tripled since then. But he also made very clear that was actually a very bad time to be buying stocks at the time, because after he wrote that op-ed, the stock market fell another 25% over the period of 6 months. So in many ways, that was a terrible market timing call. And that's what he's also trying to reiterate here, is that just because he's buying doesn't necessarily mean that the market won't fall much more significantly over the period of the next couple of months.
Sam, you and I have digested a lot of these Berkshire annual meetings through the years, and I would say amused by the shareholder proposals at the end. So this time around, you had a proposal by, I believe it was CalPERS, to split that chairman and CEO role. Also another one wanting more disclosures on climate change. None of this stuff passed, and I have to wonder, can that continue when Warren Buffett is no longer there?
That's a great question. And I think people are always sort of taken aback by hearing how he pushes back on things that are ESG friendly or almost standard practice when it comes to corporate governance and how boards of directors are operate in public companies. And people are surprised by that because he's so folksy and he's out there, drinking his Cokes and eating his peanut butter brittle and saying nice things to people that, make him sound like a nice guy. But at the end of the day, all he's thinking about is what's going to make the most money for the companies that he's invested in. And he doesn't think that he has to separate the chairman and CEO role. And he doesn't think that it's a great idea to be leaning into some of these ESG and climate-related disclosures and practices that a lot of these other companies are doing. In fact, some of his biggest investments of the last 3 months were energy companies that kind of scream against this idea of being green-friendly. So if anything, it sort of reflects him being sort of a cold, calculated business person more so than anything else.
Yes, there's definitely always been sort of a disconnect between that folksy exterior and the heart of a killer that lurks within that is clearly there. And that's, you can look at some of the deals he made during the financial crisis that certainly helped the companies that were involved, but which yielded him a very tidy profit. And on that point, I wanted to come back to the first thing you talked about, which is the market timing issue. And if you followed him, and then the market fell another 25%. I mean, it's a little disingenuous at the same time because his time horizon is not 6 months or a year or 2 years, right? So maybe, if you're a short-term tactical trader, you shouldn't follow him for market timing. But as you know, the Buffett heads, who are his devotees, will tell you they think they've done quite well by following him over the much longer term.
Sure, and they have, and that's another thing that Buffett will also say, and he said at the top of the meeting too, that most people shouldn't be trying to follow what he's doing. Like, yes, he files 13Fs because regulators make him do that, and he'll have these disclosures in terms of what stocks he's piling into and what he isn't. Of course, he doesn't publish those trades before those trades or exactly when those trades happen. But for folks who have been following him, it's probably worked somewhat pretty well. Another thing that he mentioned that's actually related to that was when he was talking about the purchases that he's been making and how on a quarterly basis they have to report unrealized capital losses because of the short-term volatility in the markets. To your point about the time horizon, he even joked, it kind of sounded like a joke, but I think he was actually being serious. He joked that he's very confident that in 20 years, he's going to have capital gains on the investments that he's made. And the data actually shows that there's actually no rolling 20-year period since like the 1920s where the US stock market didn't actually generate a positive return. So to your point, people who do try to follow what he's doing with 13Fs inevitably want to see what the stock price is going to do in the next month, the next quarter, and maybe it's going to be down. But yeah, to your point, he was saying that he reiterates that these are very long-term investments, and he rarely plans to sell, if ever.
Sam, did it feel like, when you were in the room, did it feel like the end, that this was his last shareholder meeting as CEO of Berkshire?
No, he had everything together. I mean, it sitting there in the press box for 7 hours watching this, gets exhausting. And you're seeing the other reporters and other shareholders, going in and out of the stadium and the speaking area to take bathroom breaks and stretch and all of this stuff. But he's up there and he's the live performer, and he does these long 3.5 hour stretches uninterrupted. I don't know. I mean, that's an incredibly stressful, incredibly difficult job, and he seems to be doing it just fine. So, and then he also mentioned very quickly something about writing next year's letter. So, yeah, gosh, I don't know. I mean, most people would be retiring at this point, but no, he gave no indication that he's leaving or he intends to leave anytime soon.
Well, we greatly appreciate your coverage of the event for Yahoo Finance. Sam Rowe, Ticker.co editor. Always good to see you.